I believe the major reason why people get scammed in investments is that many people treat investment as if it's an emergency. Investment is not an emergency, and just like I said in the part 1 of this video, the rules of investment is that investment is not for a lazy man. When you are earning your active income, the one you work for, you do something called hard work. Now, when you are investing for passive income, which means your money working for you, you need something called mental work. And that's why you need to seek knowledge, which takes us back to the first rule of investment, which is investigate before you invest. So the truth is, you need to put in the mental work when it comes to you earning passive income. That's why someone like Warren Buffett, the greatest investor that is living as at now, as at 93, is still reads on investments. So you need to seek knowledge. You are welcome to this video, and this is the part 2 if you are yet to watch the part 1, which is 20 rules of investments. I will link it in the description below, so check it out. Quickly, let's move into this part 2. We start with number 6. What is number 6? After I got scammed in 2020, I came up with a major rule of investments, which is I will learn to invest myself. So rather than giving your money to people to invest for you, why can't you learn to invest yourself? I'm not talking about trading. Trading is different from investments. Learn to invest yourself. For instance, you want to invest in treasury bills, and somebody says, bring your money, let me help you to invest in it. Why can't you learn how to invest in treasury bills yourself and be putting in your money so that you have the control over what is happening with your investments? The 6th rule of investments is learn to invest yourself. Rather than giving money to people to invest for you, learn it. What platform? Go and learn how to use the platform, then you are good to go. So that is the 6th rule of investments. Learn to invest yourself. Number 7, understand what you are investing in. The 7th rule of investments is understand what you are investing in. Investment is not for a lazy mind. You should have an understanding. At least the fundamental understanding. If it is treasury bills, how does it work? When will you be paid your interest? If it is FGM bonds, how does it work? Which platforms can you use? Don't just check one platform. Check platforms across board and see, okay, this one is better than this. This one's offer an higher interest rate than the other. For instance, let me cite an example. When it comes to investing in treasury bills, for instance, there are 2 apps. One offers, I think, 19.8%, while one offers 18%. You may say 1.8 is nothing, but until you invest in millions, that's when you know that 1.8 is something. But if you did not make your research, you will just go by the one which is offering 18%. But by the time you make your research, you know what exactly you are investing in. You know which platform will give you the best. It helps you to make an informed decision. So have an understanding of what you are investing in. What is number 8? Number 8 is the greater the potential return, the higher the risk. So if you see any investment that they are offering you 70%, 40%, 60%, know that the risk is also high compared to if they are offering you 15%, 10%, 20%, compared to the one they are offering you 50%. You should know that the higher the potential return, the higher the risk. So whenever you see that the potential return is on the high side, it could be a red flag. It's a red flag to you that think twice, take your time, research more about this investment rather than investing blindly. I hope you understand. Rather than investing blindly, the higher the return, the potential return, the higher the risk. Think twice, research more, double down on your due diligence when the return is higher. Just like when you want to buy real estate, for instance, and you see the price is cheaper than what is being offered in that environment, you should know that there's something that could be a red flag. Don't jump into it. I hope that helps. What is number 9? Target a realistic rate of return. Let the return you are expecting be realistic with it. Don't say you are expecting 60% return, 50% returns, when it is not your own personal business. When it is not your own personal business can give you that, but not an investment. Investment is passive. Yes, we have investment that can even give you as much as 100% return, but you must know the rules to the game. Cryptocurrency can give you 100% returns, but you must know the rules to the game. Just like as it can give you 100% returns, it can also take you down in one day. So that's why you need to be realistic with your return. So it's not as if it's not possible, 60% return, 70% return, but please be realistic so that you will be at a safe level. At least you will be investing with a margin of safety when you have a realistic rate of return. 20%, 30%, 35% makes sense, but 60, 70, there's a red flag. That's number 9. What is the 10th one? Start investing as early as possible. The 10th rule of investment is start investing as early as possible. The best time to grow a tree was 20 years ago. The next best time is now. So if you couldn't start few years ago, you couldn't start few months ago, then the best time is now. As long as you have learned the rudiments, you have learned the basics, now you know the platform you want to deploy and you want to do it yourself, then go ahead and begin to invest. So start as early as possible. Whether you are still in your 20s, you are in your 30s, try as much as possible. And if you're already in the middle age, you're already having kids, start investing for your children also at an early age and teach them as well how to start investing. So if you are yet to subscribe to this channel, kindly do by clicking on the subscribe button and click on the notification bell so you can be notified whenever we release a new video. On this channel, we'll talk about investments, we'll talk about finance, and we'll talk about business. So we meet in our next video. Stay blessed.